Welcome to Share Views, special edition this week on spread betting and matters of that kind. Joined here by Josh Mahoney, who's market analyst IG Group, and also by the director of London South East, Scott Grant. How are you today, gentlemen?
Pretty good, yeah, can't complain.
Right, the headline at the moment, FTSE through 7,000. That's got to be something which galvanises traders of all shapes and sizes. Josh, what have you noticed from your dealing desk?
Well, we noticed from our dealing desk. I guess, look, ultimately people are a little bit hesitant because they don't necessarily know what's going to happen from here. Of course, yesterday we started punching towards those new highs. But it's a strange environment that we find ourselves within. We're not in an environment where we've actually seen, the economy is doing incredibly, everything's plain sailing from here. We're seeing quite the opposite. And actually, this all started from this whole talk of sort of hard Brexit. That's not necessarily a good thing for the UK economy, but at the same time, all of a sudden you start seeing a massive rise in terms of the FTSE towards those all-time highs. So, I guess it's a continuation of what we've seen for a long time now, for a number of years. Everyone's been calling it the sort of most hated rally in history. And, that's justified because at the moment we're in a position where a lot of people are worried about the future of the economy, and you're reading newspapers, it's talking about, billions going outside of the city and the like, and a lot of jobs going. But at the same time, everyone seems to be buying stocks. Devaluation of the pound is certainly helping things, and the idea that we could see further monetary policy certainly ticking things along. So, yeah, it's just whether we can punch through that resistance and try and set some new highs now.
And you mentioned stocks there. And people, clearly, initially they go for the big names, the Reckitt Benckisers, the Unilevers, and Glaxo, etc. Is my assumption correct there on that? And then they trickle down to smaller companies?
Yeah, I think there's quite a lot of interest in trying to get some value as well, and there seems to be a lot of value in some of those certainly underloved stocks. In terms of like the mining shares are certainly having a big comeback at the moment. So I guess people are probably very interested. It seems to be the way that everyone sort of thinks. People a lot of the time don't necessarily want to go for those shares that just continue to go high because they think it's going to turn around, and instead want to try and grab something that they perceive by historical standards are actually cheap. So it's not necessarily just for the sort of really big names. You're also getting some of those shares that have actually pulled back quite heavily that people are now seeing as relatively decent value amid a market that, as we can see, the wider market is certainly pretty extended towards the upside. So possibly people are looking for value where it can be found.
Right, and I'm personally into, I love the small caps, the minnows, and trying to pick something which will go from 1p to 10p or whatever. How deep down into that area does IG go?
I mean, look, I guess the fact of the matter is, and it's a similar kind of thing that you'll find in, say, the FX markets and the like, the more liquid the market, the better the spread you're going to be able to have on it. And I guess, if people are going to be spread betting something, generally they will try and look for the more liquid markets. That means if you're looking in the sort of share space, people are probably going to be trying to get on board with the bigger names because they're more liquid. It means you get tighter spreads and the like. When you're looking at the sort of smaller caps, then you're probably going to find them less commonly traded, quite honestly. That being said, like you said, things can ramp up pretty majorly. So, if someone has a hunch that in the near future they're probably going to be able to get a sort of massive increase in the price of that share, then they could possibly do that. But I'd probably say people might go for actual share dealing itself on the smaller caps because you can get that big multiple. Whereas if you're looking to spread bet it, you probably might want to look for big moves on some of the bigger firms.
Well, when we've seen things like CloudTag, EBR Holdings, within a month or two, they've doubled and tripled, and so therefore they would work in theory on a spread bet.
Yeah, but at the same time, you don't necessarily know when that's going to be happening, so you could be holding that for a long period of time. And of course, spread bets it makes more sense to do something like that in an option where you'd have wider spread in the first place, but actually over a long period of time you won't get charged. So you get rollover fees on a spread bet, so it makes sense for something like that. That you might trade it on an option, or you might trade it with the share itself. Plus, bear in mind that when you're spread betting something, you're generally looking for movement in terms of the share price. So, something can go from 5p to 10p, or something can go from £9.10 to £9.20. They've both gone up by 10p. If something's doubling or something's only going up by a bit. So
the definition of a spread bet is what? The difference between just where you go in, where you're getting when you get out. What's the IG definition of a spread bet?
I wouldn't necessarily know what the definition is by the book, but what I would say is a spread bet is essentially trying to take advantage of movements within a certain market and attaching a price to to that specific movement. So, you don't necessarily need to get something to double for you to double your money per se. So if you're buying a share, you'd need it to double for you to double your money. You could double your money based on a very minuscule movement because of the leverage that's involved in spread betting.
Right, and just going on to Scott there. I mean, Scott, I would associate London South East to be as being an investing or a share buying and selling website or platform. Is that what it is, or is there more to it than that?
We have over 1 million visitors each month, and you see there's the gamut of what they actually do. So there'll be some people which are short-term, like short-term plays. Some people will be more buy and hold. We have London South East Trading, which offers the people, as you said, perhaps if they wish to buy Seatag or Highland Natural Resources or whatever might be, some of the more liquid AIM stocks at the moment. And we also have IG offered for spread betting as well. So we have such a range. If you think of 1 million people, that is obviously a hell of a lot of people. Their needs are very, very diverse. So spread betting comes in as part of their strategy, perhaps a shorter term part of their strategy.
So it's you've made it a one-stop shop for the spread better, for the investor. But what's the time frame? I mean, do you know what the typical time frame for trading is on your website?
No, we've got a lot of management information, a lot of granular stuff, and to wade all the way through it. We have a lot of active traders, as I said, in terms of quite a few actually just buy and hold. In terms of the actual period they buy and hold for, I should go back and look at that.
Right, and we've got as I was mentioned at the beginning, we've got the FTSE back near the record highs. Has that added to the volume on your site? Has it added the interest, the traffic on the website?
It has a number of things. We've had in the last 7 days over 2,000 posts for our 3 most chatted about shares. As I said, the viewer numbers are up. We've got the Share Views TV programme, which David Lennergas was on last week. That's just approaching 4,000 views. The site itself is more reliable and a lot faster than it was even 4 to 5 months ago, and we've got improvements planned for that as well. So all these things alongside a stock market which is burgeoning, and there seems to be confidence in that. Yes, we're getting a lot of traffic.
Right. I mean, IG has been, I suppose, the oldest name in the spread betting arena. What were your reasons for choosing IG apart from that?
Well, they're the same colour
longevity.
as us. I had to get my joke about being the same colour as us. It's a great track record. They've been around a long time. They're naturally FCA regulated, main market listed, have a great product, excellent customer service, just everything that we would look for. When we put our name to anything or associate with anyone in whatever format to whatever degree, we labour over it long and hard. We don't make decisions lightly, and possibly sometimes that's a failing for us. But IG just tick every box for us.
And they've got Josh Mahoney as well. I mean, really, it's almost unbeatable. But I mean, in terms of the FTSE being at the record highs, you were saying that people don't quite understand why we're here. We've got the US presidential election coming up in a month or so now. How do you think that's going to affect the situation?
I guess people just want the status quo, don't they? That's the sort of risk-on play. If we were to see Donald Trump, people don't necessarily know what that means in terms of the economic side of it. So you would think that we would see quite a lot of fear around that. That being said, look at what's happened in terms of fear around the Brexit announcement. We saw an initial move lower, and actually all of a sudden everyone started thinking that this could mean that we're going to see further easing and things like that. And so actually that played out quite well for the stock markets in itself. So that's one of the things that's probably the most interesting thing about financial markets. You always need to try and perceive it from different viewpoints to try and understand exactly how the markets might take it. Certainly on face value, this Brexit referendum result was going to be a negative for stock markets. It's turned out pretty different from that. Certainly if you'd said to someone around about that time that we'd be hitting record highs within the same year, people wouldn't believe you. But at the same time, there's different reasoning for that. The monetary policy standpoint, is that going to change if we did see Donald Trump come in? There's a lot of question marks around that. I think that generally people, if we did see Trump come in, would start moving towards the havens, most notably probably the Japanese yen and the like, probably not be too confident about what's happening over in the US from a sort of US standpoint.
Right, just to finish off with Scott, London South East, we've got the trading, we've got the share trading, we've got the spread betting. How much is research on these sorts of issues a part of the website?
Yes, I mean, it's what we founded the website on. I self-effacingly sometimes say we're a data aggregator and nothing more. Obviously, we're hopefully a lot more than that. We put a lot of effort into things. As I said, the gamut, again, of information, my favourite word for the day, gamut. The information you can get on our site, we offer free RNS, which a lot of private investors live by each morning. Fundamentals, directors' dealings. We believe we've got a very strong and broad offering of information, and again we've only just in even the last couple of days negotiated even more information to be on the site in the new year. So yeah, I think there's quite a lot there for private investors to be going on with.
That's it for this edition of Share Views. Thank you to Josh Mahoney, market analyst at IG Group, and to Scott Grant from London South East. See you next week.